From the heart of the Indian Ocean, the digital trade winds gust across the globe. A new dawn approaches. KPMG in Sri Lanka is ready to pave a path into the future as the veteran professional service firm in Sri Lanka. Beyond our primary service lines in audit, tax and advisory, our staff members are ready to cater to the emerging needs of our clients in the digital business arena. As an Oracle Platinum partner, KPMG in Sri Lanka provides advanced cloud-based business solutions. Our locally developed big data intelligence tool, Kala, enables automation to maximize the potential of any business. With a state-of-the-art cybersecurity lab, our specialists can render a shield to safeguard your valued data, digital assets, and provide an audit to identify and rectify lapses.
Hi everyone, welcome to KPMG's Budget Analysis 2022. This year is particularly an important year for KPMG because we celebrate 125 years in existence. And I believe we are the oldest firm still surviving in this country in the field of accountancy. Every year for over 2 decades, we have had a budget analysis, usually the morning after the budget is presented as a physical event. But now, on account of the changed circumstances that are prevailing in the country, as we did last year, we are coming to you virtual with the same budget analysis. So Suresh, we had the presentation of the proposals by the Honorable Finance Minister. What are your initial take on the proposals?
Well, this is a very critical budget for the Sri Lanka as a whole and for all the stakeholders, and also for the Honorable Finance Minister, because this is his maiden budget speech. And in fact, he presented some very interesting and far-reaching proposals, and let's dissect them and see.
Okay, so that's good. And to dissect those proposals, we have, I believe, an excellent panel representing top economists, of course, our Secretary of the Treasury, and people from each of the sectors which we believe might be impacted by these proposals. So I'm sure you're going to enjoy the discussion that's going to follow, the presentation of the proposals that Suresh will do. And I invite you to sit back, enjoy, and relax. And hope you will find this evening rewarding and enlightening. Thank you.
125 years of deep-rooted market presence, the strength and knowledge base of a global advisory practice, and the highly respected professionals that are able, through their analysis, to impact an industry. Year after year for the past 2 decades, that's what our budget analysis have been bringing to you. Good evening, ladies and gentlemen, and a very warm welcome to Budget Analysis 2022 that will once again set out that KPMG is the clear choice for our clients and our viewers, and indeed Sri Lanka as a whole. Tonight, ladies and gentlemen, we bring you the budget highlights, the budget proposals were presented in Parliament just a short while ago, and our professionals have been listening intently, analyzing, and are going to bring to you the highlights of the budget proposals 2022, which we believe are going to take Sri Lanka towards a resurgence. On that note, ladies and gentlemen, we will bring you a 15-minute presentation on the budget proposals brought to you by our principal for tax and regulatory, Mr. Suresh Pereira. And thereafter, we have a lineup of very important panelists who both represent the policymakers and industry leaders, where our participants, especially those who are linked through the Teams links, can present their questions. And we also have the session moderated by Managing Partner, Mr. Reyes Mueller. So an interesting and insightful discussion will ensue. So on that note, ladies and gentlemen, we begin the analysis of the budget highlights for tonight. And I have Mr. Suresh Pereira, Principal Tax and Regulatory of KPMG Sri Lanka. Good evening to you, Suresh.
Hello everyone. We had the opportunity of listening to Honorable Minister of Finance presenting his maiden budget, and that's 76th annual budget of Sri Lanka as well. And now few minutes back I said it's a critical budget and very interesting and far-reaching proposals have been introduced. And but I have to say that this set of proposals is very simple. And let's dissect one by one, and my presentation will set the tone for the subsequent discussion with the panel members. Right, so what do we see here? So this budget 2022 involves budgeted expenses of 3,912 billion, and the revenue contemplated, the revenue estimated is 2,284 billion, and that gives a deficit of 1,628 billion. And as I mentioned, it's a very simple set of proposals that we find from the perspective of taxation. So there are 6 key revenue proposals. The total revenue estimated for the whole year is 1,987 billion, and from the new proposals, 312 billion is expected. And so how is that 312 billion coming? It's revenue from the key proposals. There is 304 billion and another 4 billion coming from non-tax proposals. And the tax to revenue GDP is 10.7. That is what is estimated. And right, so this is my first proposal. So this is the first one that I have taken up for discussion. But actually this is not a new proposal. We witnessed this in this same proposal in the last budget also. So what is this? Special GST. Special GST. In the last budget, special GST was proposed to consolidate and affecting 5 industry areas. And I think what we see here, what we witness here is a setting of a date for implementation. And the expected revenue from this is 50 billion for the year. And Honorable Minister of Finance mentioned that the legislation have already been drafted, and this is to be implemented immediately after Christmas, 1st January 2022. So what we have to keep in mind is there's a passage, this legislation or this draft legislation has to go through in the Parliament to be enacted, and also let's see what the industry will say in relation to this date. Right. So as I mentioned, this is a proposal that was introduced in the last budget. And what are the sectors that are going to get affected by this? Telecommunication, motor vehicles, cigarettes, liquor, betting and gaming. So there are 3 industries, and telecommunication and motor vehicles also, right? Now when this proposal was presented last time, this was referred to as a consolidated tax. In other words, in place of the existing taxes, special GST is to be introduced, and there is no reference to that details in this budget, but we presume that that is how it will be implemented, because we have been told that the draft legislation is in place, so it must be based on that, right? And then the second one. Now, second one is also it's a one-off taxes, one-off tax that has been introduced, surcharge tax. So the name is surcharge tax. Okay, for people who are in the industry, this is super gains tax in another name. Now, most of us will recall few years back, and there was a super gains tax that was introduced again as a one-off tax to collect revenue for the government, and this in fact we anticipated. And so what are the details? It's 25% on taxable income. The rate is 25%, and it's charged on a person and a company with a taxable income over 2 billion for year of assessment 2021. So what is year of assessment 2021? That's a period commencing from 1st of April 2020 and ending on 31st March 21. And what you have to keep in mind is we are going to file this tax return on or before 20th November. And what is the expected revenue? 100 billion. So I'm sure this is again another proposal that will be debated, discussed during the next 2-3 weeks in the webinar circle. And let me give you a comparison. Now, when this was introduced in 2015 under the name super gains tax, you can see it was gain on individuals and companies, though there is no difference there, we don't see a difference there. And then it was on profit before tax exceeding 2 billion for year of assessment 13-14, and there were detailed rules in relation to how a group of companies would be exposed to this tax, etc. But in this proposal, the details are not given, but we expect that details will come when the law is enacted. So it's here, it's on here the criteria specific threshold is reference to taxable income. Taxable income exceeding 2 billion for year of assessment 2021, as I mentioned earlier. So rate 25% of taxable income, and so we don't see a difference there. Earlier the payment was to be made in 3 installments. No such details given here, but when the actually this tax is existing at the rate of 15%. Paid monthly, there is nothing new because it is a monthly payment. And it also goes on to this interesting statement: tax should not be passed on to the customer. And the expected revenue is 14 billion. And then there is another interesting one, a charge of 2.5%. And now there's a clarity that we need from the government in relation to this rate, because 2.5 is the rate that is mentioned in the body of the speech, whereas in the technical notes the rate is stated as 3%. So whether it's 2.5 or 3%, I believe we need some clarification. And it's on the liable turnover in excess of 120 million per annum per year. And it will take effect from 1st of April 2022, and the revenue expected is 140 billion. And then there are other miscellaneous taxes. Also, every year we find basically cigarettes and liquor getting affected by the budget, and this year also there is no different. We do find there's a reference to revision of excise duty on cigarettes and liquor. Now, the expected revenue here is 4 billion. Now, I want to stop here and make a statement. Now, when we were talking about the consolidated tax and sin industries were included. So, special GST is to be introduced with effect from 1st of January on cigarettes and liquor also. So, now is this excise duty going to be on top of that? These are the areas that I think there seems to be a contradiction to me, or rather not a contradiction, basically compared to the last year there seems to be a contradiction, because last year what was said in relation to special GST is that it will be a consolidated tax. So, the idea is this is something that happened in India also. So, where basically so many taxes are in place, it to be substituted with a single tax, and I believe that is the base of special goods and services tax also, for convenience of administration and the revenue collection. And in that context, how do we interpret this budget proposal? Revision of excise duty on cigarettes and liquor. So, unless the revision is going to be 0, or the revision is to scrap, but then how can you explain revenue of 4 billion coming from this proposal? So, something that we need clarity from the finance ministry. Right. Then we do have proposals in relation to non-tax areas. Now, what are these? Very interesting ones. Now, when you are going hereinafter, when you are driving along the roads, you need to be careful, because there is a fee on vehicles which undergo motor traffic accidents are mentioned. In other words, when you are driving and you meet with the accident, you need to pay a fee. And not only that, there is a fee referred to in relation to modernization, modification and upgrading of motor vehicles also. Now, what is this? Could be replace the existing seats and go for leather seats, or maybe install a GPS system or something like that. I believe these are the things that are captured here. And not only that, and there is also another fee contemplated by issuing a license for conducting leisure related activities in special zones. And so these all I would call them as miscellaneous revenue measures. And then in relation to issuing telecom licenses, again there is a revenue contemplated there, and so all this put together there is a 25 billion revenue that the government is expecting. So, right, now let us sum up. Now, we can see the total of 308,000 million is contemplated from surcharge tax, 100,000, social security contribution 140,000, then the VAT and the other charges 14,000 million, and special goods and services tax 50,000 million, and proposals relating to motor vehicles 4,000. So, that is basically the key proposals, the key highlights of the budget in relation to the taxation. There were so many other interesting proposals. We will discuss all this during the panel discussion. So, with that I will hand over to Nipuni. Nipuni, over to you.
Suresh. Thank you very much, Suresh. We had quite an interesting and dare I say summary set of proposals. Thank you very much for those highlights. I'm sure your team worked very, very hard to put those together. And to our viewers, of course, ladies and gentlemen, you probably have seen how the government proposes to achieve this goal of resurgence post COVID-19 pandemic and the impact that it has had on our economy. So, as Suresh very rightly pointed out, this was only a summary of or key highlights of fiscal propositions, and now we have our eminent panel of members who are available to discuss some of the key questions that you may have as we take a look at an overview of the budget proposals for 2022. Let me start off with introducing our moderator. Good evening, Mr. Riaz Mula, Managing Partner for KPMG Sri Lanka. Thank you very much, sir. 125 years on, KPMG is standing so strong, and we'd like to hear from you as our moderator. Good evening to you.
Thank you.
Ladies and gentlemen, let me now introduce our panelists for tonight. Could I also please ask the panelists to please switch on your video and audio at this moment.
Okay.
It is our greatest pleasure to have Mr. S.R. Artigala, Secretary to the Treasury. He assumed his current role in November 2019, and since 2013 he has served the Treasury as Deputy Secretary. Mr. Artigala is also a Deputy Governor of the Central Bank of Sri Lanka and has been on release to the Treasury since 2003. He has over 25 years of experience in both fiscal and monetary policy, having served in many positions, in many roles, ladies and gentlemen. And Mr. Artigala holds a Master's MSc in Quantitative Development Economics from Warwick University of the UK, and a Bachelor of Science in Physical Science from the University of Colombo. Good evening to you, sir. Thank you very much for joining us. Let me now go on to introducing our next panelist, Mr. Sanjay Mohotala, Chairman of the Board of Investments in Sri Lanka. Good evening to you, sir. Ladies and gentlemen, prior to being appointed as the Chairman of the BOI, Mr. Mohotala functioned as the Director General of the BOI. He simultaneously serves as a board member of Sri Lankan Airlines, EDP and Sahasya. He is also a member of the Presidential Task Force for Economic Revival and Poverty Eradication. Mr. Mohotala was a Managing Director and Partner at Boston Consulting Group with experience in the Pacific, EU and US before starting his journey at the BOI. And he received his MBA from UCLA Anderson School of Management, is a Fulbright Scholar, and holds a BSc in Electronics and Telecommunications Engineering from the University of Muratua. He is also among his peers because he's a management accountant, and we have a lot of accountants here tonight analyzing the budget proposals. Thank you very much for joining us. Good evening, sir. Our next panelist, I'd like to introduce Mr. Lakshman Silva, Chief Executive Officer and Director of DFCC Bank. Good evening to you, sir. Thank you very much for joining us. Mr. Lakshman Silva held the position of Deputy Chief Executive Officer since October 2015 and was appointed as a Director of the Board of DFCC Bank. He was CEO and Executive Director of DFCC Vardhana Bank PLC from January 2010 to September 2015. He started his professional career with the Department of Inland Revenue and joined DFCC Banking Group in 1987. Mr. Silva holds a BCom special from the University of Kelaniya and an MBA from the Postgraduate Institute of Management of the University of Sri Jayawardenepura, Sri Lanka. Ladies and gentlemen, we'd like to welcome Mr. Lakshman Silva. Good evening to you, sir. Thank you very much for joining us. I'd also now like to introduce our next panelist, Mr. Murtaza Jafferji. Good evening to you, sir, and thank you very much for joining us this evening. Mr. Murtaza Jafferji, who is well known in the industry, is the CEO of JB Securities and also the Chairman of Advocata Institute, an economic think tank. To your insights tonight. I'd like It is the owning company of Mount Lavinia Hotel and several other ventures. Mr. Ukwata is also the founder and chairman of the International Hotel School in Mount Lavinia, providing training in hotel management and operations. Mr. Ukwata served on the board of directors of the national carrier, Sri Lankan Airlines, and its catering arm, Sri Lankan Airlines Catering, for nearly 8 years. Mr. Ukwata currently serves as the Honorary Consul General of the Republic of Slovenia in Sri Lanka since 2015 and is the current president of the Hotels Association of Sri Lanka, which consists of 250 member hotels from all regions of the country. Thank you very much for joining us tonight, and we look forward to your input, sir. Thank you. And now, ladies and gentlemen, our next panelist, Mr. Suresh Timel. Good evening to you, sir. Thank you very much for joining us. He is an entrepreneur and agricultural engineer, a graduate of Cal Poly State University, San Luis Obispo, California, USA. Among his many achievements, he leads several several industries and companies, and he actively serves on the Council of Employers Federation of Ceylon, a director of the boards of the Hambantota District Chamber of Commerce and the Skills Development Fund Limited. In December 2020, Suresh was appointed as the chairman and chief executive of the Sri Lanka Export Development Board and currently serves on multiple presidential commissions and task forces related to economic development, agriculture, and exports in Sri Lanka. Good evening to you, sir, and thank you very much for joining us. We look forward to your insights. And of course, providing our input on things, Mr. Suresh Pereira, our principal, tax and regulatory. Thank you very much for your insightful presentation, Suresh, and we look forward to your contribution at this evening's panel discussion. Well, ladies and gentlemen, as you can see, we have quite a number of very eminent panelists, people who are policymakers, policy drivers, and also leaders of industry. And why do we have them here tonight? Because this budget proposals and these budget highlights focus on resurgence. With that, I hand over to our moderator, very capable moderator indeed, and someone who has deep knowledge over several decades of the Sri Lankan market, Mr. Reyes Mulla, Managing Partner, KPMG Sri Lanka. So, over to you.
Okay, thank you, Nipuni. Thank you. Welcome everybody to this Budget Analysis 2022, coming virtually for the second year in succession. And of course, I particularly want to welcome our panelists who have found the time to be with us today to share their thoughts on the issues that we hope to discuss. I particularly want to thank the Secretary to the Treasury, Mr. Artigala, and also Mr. Mohotara. Both of them I know are tied up in several programs, but they were very kind enough to agree to come to our program and then move on. So I might direct some of the questions to them early, so that I can release them, because they have commitments for other programs later in the evening. So I'm going to start with the first question to the Secretary to the Treasury, Mr. Artigala. The first question is actually a clarification which I'm sure you should be able to provide. I think Suresh mentioned in the presentation that in the budget speech, the Honorable Minister of Finance talked about the social security contribution at 2.5%. But the technical notes had it at 3%. So just wanted to clarify whether it is 2.5 or 3.
Good evening. Thank you and thank you for inviting me. Just to clear what Suresh mentioned, certain things. Social security contribution, it's 2.5%. And I think he mentioned about the 120 billion thing. And he was talking about this special goods and services tax, and he said just 4 billion and what will happen when this comes, etc. So special goods and services tax is will be applicable for liquor, tobacco, leisure industry, and those things. So it will be a composite tax, as Suresh mentioned. So there would be just one tax. So that's why we have said altogether we are expecting 50 billion from those. So it includes liquor, tobacco, etc. But because the minister has announced the changes for liquor and cigarettes from tonight, we have used the excise special provision tax and excise tax, that is for cigarettes and liquor respectively, to change the rates from tonight. So that will be applicable from tonight. But moving forward from January 1st, it will be goods and services tax. So the rates would be adjusted accordingly to have a composite tax. Because I don't think we will allow the rates to come down, right? You understand that, for these basically are sin taxes. That's number one. Then he mentioned about auctioning things. Yes, this thing, I think you all know, these licensing, especially for the existing frequencies, it's very nominal thing. It has gone, or it has been given, you know, how these were distributed. So what we are proposing here is to have an auction, and also the 5G systems will be coming in the future, very in the near future. So those frequencies also will be auctioned. So there we see a lot of potential. We have used very conservative numbers here. I think Suresh, I missed Suresh what he mentioned about the surcharge tax. I think he was talking about super gain tax. I think something similar, yes. And also now another question that would come is this turnover tax or turnover, this social security contribution for margins, like wholesalers, etc. What would happen? We will consider those things when this law is in a way drafted. So those will be considered. So basically I just want to touch, because I have to leave, sorry, key factors in the budget. Although Riaz didn't ask me that, but I will just quickly summarize the things. What I feel is there are certain reforms that will be applicable to private sector and public sector, right? One such is about the free-port concept. I think Sanjay would expand that when he discusses about this. Then we will be doing certain simplifications, especially for the imports and exports, where these what is it called authorizations or approvals have to be sorted from multiple agencies. There we will now, for example, if the quarantine, some item which is imported needs quarantine, then they have to go to import, export control, etc., etc. So it will be just the main agency and then straight to the customs. Those changes will happen. That's a big reform, I think. And even for the exporters also, there would be a rating system where the public, the private sector chambers also will be taken into consideration for this rating business. And then it will be basically free in a way. The custom matters would be simplified, and they will be, if the ratings are good. But if they are found something doing bad things, then they will be deported. That we will do. But that's another reform that we are in the budget that we have talked about. Then about the procurement procedures also. We are trying to align these government procurements to the normal World Bank, ADB type, international type procurements. That will be there. It's mentioned in the budget. That is then if you take the trade reforms. I told you about the rating of the exporters, HS codes, and then also there would be certain simplification in the cess and the custom duties. Those gases will be out in the future. That has been not yet out. So there would be certain para-tariff removals that will happen in the gases that will be coming in the near future. So basically, I will stop at this moment, read the budget carefully, and then we can discuss if there are any problems later. Thank you very much. Sorry, I have to leave for another thing.
Can I ask one question? One question, I'm sorry, I know you have to leave. One of the questions that has come through is they said the revenue proposals this time didn't deal with direct taxation. A lot of them are indirect tax related. Just to understand the rationale behind that.
No, the thing is, I think we have clearly mentioned in 2019 December and subsequent in 2020 budget also, or 2021 budget also, that we are not going to tinker with this the tax structure that we have announced. But unfortunately, we have to do certain, within the broad framework, we did certain changes. That's why we have clearly mentioned this one-off. We want to have this clarity, the continuity and things. So that's why we haven't changed these things. Also, I think nobody will grumble, given the circumstances, paying a small amount, at least one-off, right? So Suresh, that's in a very broad sense. We don't want to change the structure, but this one-off is just that's purely it's a one-off that we wanted to put. Okay.
Okay. So thank you very much, Mr. Article. I know you have to go for another one, but thank you very much for that clarification.
Right. Okay.
Thank you very much. All right. I'm going to move to Sanjay. I know Sanjay is also linked. Due to attend another program later this evening. I'm going to ask you more on the broad aspects, on the implications of the budget. How have the current economic environment of import restrictions, rising budget deficit, foreign currency depletion, reserves, etc., how have they impacted the inflow of FDs? Because that's your principal role.
Those macroeconomic stability definitely impacts FDI, but I think more importantly, those impacts in terms of the projects coming into the pipeline. So typically, FDI is what is ongoing, what's coming onto the ground. I think with these challenges, even if you look at last year, we had about 1.4 billion worth of capital formation. Half of it was FDI. This year, for 6 months, has been $770 million worth of capital formation, about 400 million in terms of FDI. The project volume is there. So we got about $2.3 billion worth of projects approved last year, 1.4 billion approved so far, and about 1.9 billion in the pipeline, including infrastructure projects. So I have to be open about it. But I think these things lately have been deterring some of the investors in terms of expanding, or where their buyers have been worried about a certain concentration risk, where their primary sourcing has been or is from Sri Lanka. So this is something we really need to manage, and I think the budget only provides a good outline in terms of the progressive reforms that we're going to do, and in terms of the physical balance of the treasury. But I think the monetary, the stability and overall the dollar-based stability, which has to come from the central bank and treasury together, is absolutely necessary, and I think it is the bedrock of what we do. And then comes the policy consistency, and then the conducive climate to invest, and of course the factors that we need to improve within the country, whether it is labor, whether it is doing business, whether it's cost of doing business, and also creating attractive verticals and incentive structures around it. So that's how I look at it. So it is not a cakewalk. So there's a few challenges, but I think the important thing is to provide that clarity fast as possible, and it cannot be something that moves on, but there has to be a firm targets, milestones, so that the investors can look
What would you, as the the chief, shall I say, the salesman for the country for foreign direct investments, what are the initiatives would you like to see? Starting to talked about simplification, one stop, etc. I mean, what would you, in your role, expect to see some of this translated into concrete things which can help you in your objectives?
I think there's a lot that we can expect for, and probably we have to implement as well. And I think budget outlined several of them. I think the first one was, I think, taking out the fees or consolidating fees for business registration and all the other functions is only one aspect of it. But I think most importantly is making sure you register at one place, provide the information you require, and that get translated into all the other departments that is needed. Now, SEC, Stock Exchange, has started this. Security and Exchange Commission, BOI, is in the process of doing it. And I think this is a good thing that the national priority has been outlined around this. So that means the departments will end up working with similar technology platform, same set of information. Things can start parallel. You don't have to send a letter and wait for another week to arrive, or somebody doesn't read emails. So there could be a lot of ease of doing business in terms of inter-agency coordination. And I think that is what is lacking for us. And I think that is something we really need to think about improving, because I think there was fundamental thing that the finance minister outlined. Now, I come from private sector, sitting in a government job, and it is the role of the government is to provide and facilitate and enable the private sector to really run the economy, because that is the engine of the economy. And we are not here to put the barriers and to see what is and how we cannot not allow, but to say what can happen and what can be done. So I think that mindset change, and I think even the smallest way that we have started, maybe streamlining in terms of the fees, but also in terms of information interchanges, because that can also then fall down, because if you start the business registration with the right SIC code, with a set of information, and it's shared with all the other departments, and then it gets translated into the customs, the banking system, and so on and so forth. So everyone has one view of one business. Makes it much easier to do things, approval, green channels, whichever it is you want to do. So I think that is one of the aspects that I really like. And in terms of the attracting FDIs, what's really important is I think we need to really change our mindset, because we used to think that we are the, sorry for my language, but virgin on the beach, but that was the case when it was 1978. Now today we are fighting with 1,000 IPAs globally. 1,000 IPAs globally to get the FDI we require. And it's in an environment where the FDI pool has declined by 40%, right? And also, if you look at the manifest in terms of the budget, the type of FDI we require in terms of the manufacturing, because the finance minister has articulated a certain amount of manufacturing that needs to bring in, but also even if you look at our services sector, both of those are very competitive segments, meaning steel industry can go anywhere. So we have to make sure that we are really attractive in terms of for them to come in. If you look at knowledge economy, our young generation can work from anywhere. They can work from here, they can work from Australia. They don't have to work for Australian company being in Australia. They could do it for US. So is people from here. And we are fighting for those tech companies and all that to come in here. So we need to really double down and have a strong public-private partnership in terms of getting these investments and engaging these companies at the boardroom level. Because it's not about doing a roadshow, it's not about meaning it is helpful, and our embassies and missions do play a critical role, but we really have to work with them to really think about what are the policies, what sort of education reforms we need to get in, what kind of talent pool do we need to build in advance, how do we incentivize that, what do we need to bring these guys in. So that is a strong public-private partnership, and a government agency or several government agencies, I wouldn't say equipped, have the know-how to be able to do that. And I think the successful countries like Invest India, IPS like Invest India, if you look at Bangladesh, if you look at Vietnam, that's a model that has gone to. It is a painful transformation for a government agency. Many people will be up in the arms, but I think many of the panelists will agree that is a necessary thing to do for this country, to bring that FDI and be competitive in that playing field in terms of bringing the right FDI for this country, because We've been stuck at $3,800 to $4,200 GDP for the last 10 years. So if you want to get the policies, if you want to get the orchestrations, this is a difficult pill to swallow. Many will be up in the arms, even including my organization. But I think it is a necessary evil we need to cross. And I think those two things, if you ask me, like, are on top of my mind. But there are many other aspects we could look at, like in terms of how we could, put the country on the map and get the FDIs. We need to make sure that our lobbying is proper, our marketing is proper, that we are on the news for the right reasons. Not as much as what we were in the news for the last 6 months in terms of beauty parades and all that.
Yeah. Sajay, I'm going to ask you one more question because I know you have to move on. The success of the BOI or its predecessor GCEC, as we call it, was that it is a one-stop shop. I mean, you could give your tax reliefs, you could give your approvals, people came in and bang, you are up and running.
Yeah.
Over time, some of those were taken out. You couldn't give tax reliefs anymore, tax holidays or whatever concessions, approvals had to go to different places. I know that there's been a move to try and bring it back into a one-stop shop. Where are you in that process? Because we can attract people, tell them to come, but when they come, the user experience of getting all the approvals in one place without having to shunt to several places, I think is critical. Just asking, where are you in that process of getting back to being a one-stop shop?
I think in that whole question you mentioned very two important things. One is the user experience, and it's always the probably we will give that. But then our country has also evolved, our environmental laws have evolved. And I do understand. But I think the important thing is the customer centricity, because I should not be giving you a letter and ask you to go from post to pillar for different departments. We should be the agency to facilitate that. And that should be a predictable timeline. If we take 3 months to do an environmental study, it is a 3 months to do an environmental study. It's not 6 months, it's not 2 months, it's not 1 year. And then I think the most important thing is moving towards self-governance. We should allow companies to govern, because if we have already 1,200 foreign companies, and if they are governed by very strict boardroom policies and environmental and all the other things, we should allow them to self-govern through set of rule structures. And I think the most other important thing is, where can we really do the one-stop shop, where it really matters. Now, if you look at the finance minister's budget speech, so he had put quite a bit of allocation of money, and also have outlined which sectors that he want to have dedicated zones through public-private partnership or through the government, and what are such sectors that you really want to incentivize, right? And if you come into like a BOI zone, it is a one-stop shop. Right, the land allocation is done by BOI, project approval is done by BOI, environment is governed by BOI, then the engineering approvals and clearance and everything is done by BOI. The moment you have that, you can import your material, it's also done by BOI. So it's basically a one-stop shop. Now that kind of orchestration is needed for very complex businesses. Now we're trying to build pharma as a sector. It's a very difficult one with a lot of the countries fighting for the pharma business, because we don't have, it's a very young and up and coming sector. So we need to at least try to get a little bit of the pie. So those kind of things, the entire environment, all the clearances you need already done. So from a very, basic formulation of a Panadol pill to a very high-end or complex API or active pharmaceutical ingredient, or to build a oncology drug, which is a cancer drug with radioactivity. All that has been pre-cleared, pre-planned. So those you don't have to go. Now, otherwise, if you had to go and start a company outside a zone, it will take 3 to 5, maybe 6 months to do the EIA. So there are ways and means we can look at it. It's not necessarily the all days of where you come in, I give you an approval and get the piece of paper. That we can do for certain sectors, IT and all that, but others we can bring down the time frame and facilitate through multiple ways. Being a customer-centric organization, through the data interchanges and one point of filling the documents all you needed. Also on the other side, coming into BOI zone. So in 3 ways we can achieve it, but I don't think it's wishful thinking, and I don't think it's a proper diligence is being done if you just want to stamp and give a document and say, well, welcome, everything's done.
Yeah, I agree. Things have indeed got more complex, and you have a tougher job in your hand for sure. Thank you, Sanjay. I know you're most welcome to stay on, but I know I did the questions with you because you have another commitment. Maybe I'll now move on to Murtaza. Murtaza, I mean, usually it's nice to look at the economic context of the budget, and you are the economist on the panel who can talk to us. My question to you is that, the budget deficit for the last 3 years was, for 2018, it was 5.3%, 19, 9.6, for 20, 11.1. These are as per CBSL statistics, while the inflation rate has gone up to 7.6% as per the October. Right. In your experience, what would you think will be the key measures the government should take to reduce the deficit and stabilize inflation? It's a double-barrel question, but I know you're well equipped to answer that.
Thank you, Riaz, for inviting me this evening. Let me try to give you a framework of how to think about the problem. So you gave some statistics that was for 2020. In the appendix to the budget speech, they have given some other information. The projected deficit in 2021 is going to be 11.1%, very similar to 2020. And the absolute number there is 1.826 trillion rupees. Lots of people don't understand what a trillion is. In Sinhalese, you can say Laksa Koti. It's a very large number with 12 zeros to it. And the projected deficit for 2022 is 1.628 trillion. In absolute terms, it is slightly lower than 2021. And it will be a deficit of 8.8. The primary deficit, which is an important number, will also be projected to go at a deficit of 2.8, which means revenue minus all expenditure without interest. So primary deficits matter is because that is what a finance minister can control. The interest is on inherited debt. And when you run primary deficits, you are adding to the debt stock besides the other dynamics that increase the debt to GDP. So if you look at on the expenditure side, there isn't that much that they can do. It is great that they're signaling to be a bit more cost conscious, but your biggest expense item is interest, followed by salaries and wages, and followed by pensions. So on salaries and wages, one of the negatives are that these 53,000 new graduates, they're going to make them permanent, and they're going to give a slight increase, and it's budgeted about 27 billion. That is the cost of this. And they're also planning to increase the retirement age, which would probably reduce the pension liability, because at the moment somebody can go into retirement at 55 or slightly higher than that. And then that means that person is not productive for the state. So coming back to your question, have they done sufficient to reduce the deficit? I mean, by their own projections, the deficit is 8.8, which is a very, very large number. So how does this deficit come? It's a revenue problem. The first thing is to look at is what role the tax buoyancy is playing. So their own projections is for the economy, which is estimated at a nominal rate to be at 16.4 trillion this year, to go to 18.3 trillion next year, which is 11.5% nominal growth. So we don't know what the deflator is going to be, but you're talking about a 5.5 to 6% growth, real growth rate next year, which is a very strong recovery, that you're projecting a very strong recovery. Now, the tax buoyancy has a big impact because economy that is doing well, people make more income, more profit, therefore they have a higher tax base to pay. The next is that they have certain what they call one-off taxes, and they have also allocated something to tax administration, which is also very welcome, that the tax effort, the effort has to improve. But the tax policy, I have serious issues with it, because a good tax should be fair, should be easy to collect, and it should be efficient, that it shouldn't create economic inefficiency. So the Treasury Secretary says that we promised consistency, and therefore we only can do one-off things. I have a fundamental problem about consistency, because this tax policy is totally unsustainable. that they are projecting something like 10.5% of GDP tax revenue. A country like us, at our level of development, needs to be at about 16%, and our revenue to GDP should be around about 17 or 18%, because our expenditure is projected at 21% of GDP. So we just can't sustain that. Of course, we can't do it all in 1 year. So my sense is that we are running very large deficits, and debt is going to snowball, and it is already in a very unsustainable situation. So I have serious concerns about debt sustainability, and that is by far going to be the elephant in the room. Now, when you talk about inflation, the inflation basically, is it transitory or is it persistent? There is a global commodity boom, and recently they have removed the price controls on a lot of items. The prices have gone up, but still they haven't removed price controls on diesel, petrol, kerosene, electricity. All of this has to increase by at least 20, if not 30%. To give you a data point, we are selling diesel at 111 rupees. The landed cost of diesel today, without any taxes, without any distribution costs, is about 121, based on about $92 a barrel on diesel. So when you factor these things in, the actual level of inflation is not 7.6, but probably above 8.5, right? And there is an announcement in the budget. So inflation becomes persistent if you have a wage price spiral kicking in, so that, you know, people go, the salaried people go and ask for higher salaries, far in excess of a productivity growth. We have seen an initiative in the budget for, I hope it is an anomaly, that they're addressing the teacher salaries, and that's budgeted for 30 billion, but they haven't signaled about salary increases elsewhere. And there was an expected announcement for an increase in the minimum wage, which also didn't come through. So that is something good. But I'm afraid that inflation will be a big challenge. And with this kind of debt, we will have to have financial repression. And for a long period of time, we will have to run inflation above the central bank's target rate of 4 to 6%.
Okay, there is one question that has come up, a quick one. The budget speech, the Honorable Finance Minister said he's expected to get 140 billion from the social security contribution. The question is that, you know, the earlier NBT, which was just 1% lower than what they are asking for, barely made 100 billion. So how realistic is this 140 billion is a question that is being asked.
Yeah, so first of all, you've got to look at the base, right? The base is not the VAT base. It has a different base. So now you have more complications, because people will have to register separately, because previously they had all the people registered for NBT, everybody got deregistered. So now you have to go and register again. So you have to incentivize the people that you need to register again. Second thing is, the nature of a transaction tax such as this is economically very inefficient, because it creates an efficiency cost, because at every interaction, you are basically going to pay this. It's a cascading tax, and it would have been so much easier for them to use the VAT to widen the base and slightly increase the rate, and use the VAT as a method of collection, because it doesn't create that level of distortion. So it's a tax that is easy to collect, but I'm afraid that is not very efficient. And a quick comment, Riaz, which I may have forgotten, about this special 25% surcharge. The problem that I see in that is it is only on taxable profits. So that is, it is going to tax people who are already paying. Now the problem in Sri Lanka is that you have a erosion of the tax base, because we have gone and given so many generous tax holidays that these people basically are not going to be in this. What they should have done, in my opinion, is to have had a minimum alternative tax as well, and got those people who are benefiting from outrageously generous tax holidays to also contribute, because it doesn't seem to be fair. Like, for example, the banking, that their VAT rate has gone from 15 to 18, plus basically they are going to pay the surcharge on the previous year's profits. You know, and I think the finance minister said something like 47% will be left to them. But this is the most distressed sector, which is sitting on a large amount of Eurobonds and SLDBs that are distressed, and they've also had large amount of moratoriums. And if you are going to restrict the internal earnings generation, this is the lifeblood of the economy. So I have some serious concerns about the distortionary impact of what has been suggested. It would have been far better to use a wider base and had a minimum alternate tax, at least 15%, so that those people who are exempted through tax policy is also made to share the burden.
I think that's a good point. I think the whole world is going towards the concept of a minimum alternate tax, and I think that 15% is what globally they are proposing. So maybe that's something we could have looked at. But you teed off something very a good question for me to ask Lakshman. Lakshman, as you know, the chairman, I will come back to you, Murtaza, on another question, but I'd like to take this opportunity to ask Lakshman, Murtaza did mention, and the budget talked about the banking sector, the GST has been, or the financial VAT has been increased from 15 to 18%, and then you also get hammered with the other one. They look to the bank as like the sacred cow where you can milk as much as you want. Just as president of the Bankers Association and CEO of a bank, what are your thoughts on that?
Good evening, Riaz and everybody, and thank you for inviting me for this. And as you correctly mentioned, the banking sector has many challenges to face, and in the last 3 years or so, from 2019 April onwards, we had been having challenges with regard to our clients' portfolios, how to recover those portfolios through the moratoriums. So these are some of the key problems that we have been facing. And as everybody knows, that moratoriums are something that we had offered to clients, but recognizing the income are still going on. Banks have, for prudential purposes, have been requested to make additional provisions over and above the required provisioning mechanisms. Yet, the profits that really we have disclosed, or the banks have disclosed, I would say the numbers are not the real cash profits that we would be having. So, having said that, when additional taxes are imposed on those profits, and when the VAT has been increased from 15 to 18%, surcharges and all that, put together currently we have about effective tax rates of banks around 35 to 40%, which I expect to increase it to about 50 or beyond 50%. As Murtaza mentioned, it might be about 47% left for the banks. So we are facing a few challenges in this regard. One, Riaz, as you know, Basel III implementation of central bank corporate governance regulations requires banks to maintain minimum capital requirements. There are various other ratios that the banks are expected to maintain during the going forward. So with all these challenges, the banks, all our banking sector in Sri Lanka would face a severe constraint as to how these the requirements of regulators also to be met, while realizing the fact that as a responsible institutions in Sri Lanka, we also need to support the government endeavor to come out with this pandemic situation, economic restrictions that have been imposed. So therefore, whilst we appreciate the responsibility of the banking sector, but of course, I would suggest that actually at this moment of time that I think central bank also would have to look at as to how the banking sector, the policies with regard to capital augmentations, maintenance of key ratios, as to how to do that. Otherwise, it's going to be a serious challenge because all our profits are going to get impacted. We have actually ICAP documents for 5-year projections that we have submitted to the regulator, shows a different picture completely. Now it had to get revised. And also, as you know, pandemic situation, not only the country, but all over in the world, we are also finding difficult how to augment the capital. Existing shareholders' returns are coming down. So in that sense that we have many challenges to face. So it's a real thing that the bankers will have to look at going forward, how to manage these troubled times while honoring our duty for the country's sake.
Lakshman, as president of the Bank Association, I'm sure your members must be talking to you all the time about the challenges they face with regard to LCs and, arising from the country rating, acceptance of LCs, etc. Would you have thought that maybe this budget would have given some indication of how that is going to be addressed? Because I didn't see anything particularly being discussed about that aspect, and that is a critical issue for banks.
As everybody knows, there is a foreign currency liquidity shortage in the market. I think such control mechanisms to be adapted, I wouldn't expect to come from the budget per se. But I think as the regulator, Central Bank of Sri Lanka have introduced many provisions in the recent past to address this issue. The mandatory conversion that have been proposed is one such initiative that had been set out by the central bank, and we are yet to see the outcome of those, because first conversions would come by the 7th of the next month, as to how those things will happen and how much of conversion will happen, how much of liquidity will come to the market is something that we need to wait and see. At the same time, it is important to see that the central bank also have actually set up a separate unit, which is an encouraging thing, to dedicatedly look at how the remittances flows can be encouraged to Sri Lanka. All this time, the remittances flows were the responsibility of the banking sector or the financial sector, who has to have their own arrangements to get the remittances over to Sri Lanka. But as a regulator, I think they have now thought very strategically, set up a unit, dedicated unit to propose schemes and privileges that can be offered to the remittances, people who are sending remittances from overseas. So to address your, if at all, what we could have expected from the budget is some of the concessions that can be offered to the remittances people from overseas. But of course, that can be covered through the other regulations that the central bank of thinking probably governance short-term business plan might in a short time, once the institution established, might get through to us. But I also didn't see anything very specific from the budget to address the current the liquidity situation. I think that is a role of the central bank to play, I believe.
Thank you, Lakshman. I have two panelists here representing two sectors that had special mention in the budget. One was the export and the other one was the tourism. And maybe I will start with the export with Suresh. Suresh, like Lakshman mentioned, over the last 6 months, we have had 5 gazettes. The last one, which was on the 28th, which talked about mandatory conversion even for the service sector. And in the budget speech, the Honorable Finance Minister talked about setting aside 5 billion for infrastructure support for export. How does these developments, these gazettes with regard to mandatory conversion, and how do you see the infrastructure support that is being promised? Where would you think the support should be to help you in your task as chairman of Export Development Board to drive our exports up?
Yeah, thank you. And first of all, I will address the financial situation. We all hope that that's going to be temporary, and that the policy inconsistency has been a big headache for our exporters, and we hope that in future there will not be foreign exchange restrictions, conversions and things like that. That always makes it very uncomfortable for an exporter. just like, the foreign remittances from our workers. So I'm also very happy to note that there is a dedicated unit for that purpose, and hopefully they will do something that is more helpful to the exporters, or more understanding about the exporters' needs as well. Because, I think exporters have been struggling a lot with this mandatory conversion and so on. And we hope that all this is temporary, and that, more understanding on both sides will ease the situation. But on this the infrastructure idea, I'm quite happy to see that money, I the information I have is that it's for ICT BPM, which is a big sector for us to expand. And I am expecting that this infrastructure might be for skills development and things like that, and also our telecom needs, bandwidth, and that kind of thing. And then human resource development is listed, export processing villages, which is a good thing. I think that we need to organize our small producers into associations and create some structure so that our SME producers can reach out to the export markets with the kind of quality and premium products that are needed to be exported. Because today we are basically trading and not adding value, and we need to convert our exports into a more industrial exports as opposed to trading mentality. So we hope that value addition is part of this. And then also the big ones, I think Sanjay mentioned pharma. That's we are going to do a pharmaceutical park in Hambantota, and I think that's part of where that money is headed. Also, the Eravur textile plant for the apparel sector. And then I see there is organic fertilizer, the development, of course. That's a very important priority. Then I saw steel, and that too, I think, for our industry will be a good thing. I'm not sure what the infrastructure improvements for that industry. Then rubber, and I think rubber and coconut, we are talking about hubs, or sort of a zone for importing and exporting, sort of a free trade zone, so we can import the raw material that we are lacking in Sri Lanka, and then re-export. So I think all in all, that looks good. And the investor tax concessions and so on, I would like to see what that means, because that's something also for the export industry. When we go to do value addition, there needs to be a lot of investment, and I hope that there will be some kind of concessions for the investors, which I haven't seen with the information I have yet. And I would be failing in my duty if I did not support Sanjay when he was talking about interagency coordination and sort of the collaborative framework that is necessary among government agencies, and to expedite our support. And of course, the single window, which is the one-stop shop concept. These are absolutely necessary to increase exports in this country. So That's my quick answer there.
Thank you, Suresh. And actually, I was very encouraged when I heard the speech of the Honorable Finance Minister. He talked about the Iravur fabric and backward integration and rubber. They're very natural things that I think we should look at. So I think that's very encouraging. So maybe I will now look at the other sector, which is the tourism sector. And Sanat, I'm going to move to you. The tourism sector got really affected, I think. The COVID hit, I think, the tourism sector more than anybody else. But we are seeing encouraging signs. Today I read that they're expecting 200,000 tourists for the rest of the year. And the tourism industry is just coming out of a moratorium or still an extended moratorium. How do you see, what do you think? Are you happy with what the government has come up in the budget to be able to, for tourism to back again play, that vibrant role, bring in $5 billion plus dollar inflows? I think you're on mute. Sanat, I think you're on mute.
Okay.
Thank you.
Thank you for inviting me for this discussion. Unfortunately, the budget has not addressed the needs of the struggling tourism sector, which is desperately in need of government support to help them to survive. As tourism can easily be a game changer in my mind. Tourism can be a game changer for countries' socio-economic development of post-COVID recovery, because after all, we generate foreign currency, and that's exactly what the country is in need of right now. So with all this in mind, we have submitted a number of proposals on debt restructuring, which is primarily the number one need right now. As you said, the extended moratoriums are going to expire next year, and we can't afford to go, keep on extending these moratoriums because it does not serve any purpose. It only delays our pain because interest is calculated, the clock is ticking every day. So we need to find a long-term solution for this, because we are unfortunately sitting on a mountain of debt, and we need to address this, and we can't address it alone. We need government support in order to do that. And we have met the authorities several times, and we have discussed this. It's very unfortunate that Dr. Atigala had to leave this discussion, because we have had a number of discussions with him too. And we were given some hope that this budget is going to address some of our major issues, and so unfortunate that it has not so far. I mean, we understand the lack of fiscal space the government is presently facing due to this declining foreign reserves, mainly due to COVID. So we submitted a win-win solution to the government. And, unfortunately, I guess it is still under consideration. And we hope that the government will address this in the near future. At the meantime, I would like to, on behalf of our industry, I'd like to record our appreciation for the implementation of moratoriums for the industry as a whole, which has, as I said earlier, it has helped us temporarily, but we need a long-term solution now.
Suresh, I'm going to ask you a question. I know you have had concerns about the issue of capital gains tax. What it has, how effective it has been, or has it met the government's objectives of the revenue expectations, etc. Can you share your thoughts on that?
Yes, let me trace the history of capital gains tax. In Sri Lanka, capital gains tax was there before 2002, and it was abolished in 2002. Now, at that time also, if we ask the commissioners that were there, the Inland Revenue Department, they have pointed out that it did not contribute much revenue. So in 2017, when this capital gains tax was being introduced, the same concern was raised. And in 2017, that is for the year of assessment 2018, the estimated collection was 5 billion. And during the last 3 years, 2018, 2019, 2020, it has collected only 1 billion. And each year it has contributed less than 0.1% to the consolidated fund, or basically the collection out of the total taxes collected by the CGIR. So there is a question: is this tax is this tax basically generating revenue to the government? No. Now, when you take a tax, there's a downside also. Now, in relation to capital gains tax, it's a red flag for the investors. And the capital gains tax hinders movement of capital. Capital gains tax hinders capital formation. And so, when you do a cost-benefit analysis of capital gains tax, when there's a hard evidence here now, basically it's not generating intended revenue. Should we keep that tax in our tax net? So that's a question that I think the policymakers should address.
Good point. Whether you're saying the amount of the context of what we have got, and capital gains tax is sometimes seen as an inhibitor to capital accumulation and foreign direct investment. So it's a good question that you are raising. I'd like to ask, before the budget, I think everybody was tipping that we will have payee back and introduction of withholding tax on interest income. I mean, people virtually were resigned to that. It would not have been a new tax. It is just only a administration of tax collection. But somehow they didn't do that. I don't think that would have seriously gone against the consistency. But what are your thoughts? Any reason why you may guess as a tax practitioner why they didn't go down that route? Because that would have significantly enhanced the revenue collection, at least not the quantum, but at least the amount that is collected.
No, so basically the pay as you earn tax was abolished with effect from 1st of January 2020. And see, now when you look at pay taxes, it was a convenient tax for all three stakeholders. Now, who are the three stakeholders? The taxpayer, the tax collector, and it also gave consistent and constant revenue to the government monthly basis. Now what do we have? Now the taxpayer has to file his own tax return, so it's inconvenient for him. And also for the tax administrator, there's more administration involved. And from the point of view of the government, the same revenue that was there is not coming, because there is always, I do not use the word evasion, basically the tax payments are not taking place in the way in which the taxes were collected under the withholding tax system. So see, the point is, withholding tax mechanism is a very, consistent way of collecting taxes. Now, in relation to the withholding taxes also, the other place on payment of withholding tax applicable on service payments, etc., all the other kind of payments. For a country like Sri Lanka, I think withholding tax mechanism is the better way of collection of taxes, because our revenue administration is not that strong. So when the circumstances are such, withholding tax, I think, is a better mechanism to collect the taxes.
And it could have been accommodated within the policy framework of consistency of tax policy, because we are not introducing new taxes. It's only an administration change.
Correct, exactly. Now that is the point. Now basically, when you look at these budget proposals, yes, basically the direct taxes have not been changed at all. But as you rightly pointed out, yes, without changing much, basically we could have introduced pay taxes again, the concept, and the withholding taxes, and that could not have mattered much for the taxpayers. I think like Mr. Jafferji pointed out, also you have to keep in mind the social security contribution is a turnover tax in another name. Turnover tax was abandoned, and now again it is coming with other names. So
We have
Okay.
to ask that question.
Now that you mentioned Murtaza, I'm going to get back to Murtaza. Murtaza, the elephant in the room, so to say, is how is the government going to restructure our government debt and be in a position to get our credit rating kicked up a few steps up. We didn't see anything specific in the budget. Do you think that there's a plan B with the government to deal with that?
So if they have a plan B, I am not aware of it. I mean, to me, this is the single biggest issue that is confronting the economy, and time is running out. So let me give you some background. I mean, obviously, we have to overcome the pandemic, and we have to give full credit to the government that their vaccination program has been fairly successful and that they're ramping up the third dose. Hopefully, the immunity will improve. We've also, as a country, been extremely lucky in 2019, 20, and 21 that the weather has been good. We have had excellent rains. I don't think we're going to be lucky next year because it's just cyclical that weather does change. So, for us to have a plan B, the first problem that we have is we need to stabilize the situation. And the biggest source of instability is coming from excessive amount of spending in the economy. So we needed a higher tax revenue, and we also need higher real interest rates. Now that the central bank has allowed market interest rates to go up, Riaz, perhaps policy rates are significantly lagging because at the last monetary policy meeting, they didn't increase interest rates. But the real rates in the market are shooting up. So that is also good news. Then you have the issue that all these energy prices are not reflective of world market prices, and they also have to go up so that these SOEs, although they're talking about SOE reform in the budget, the biggest drag is coming not from excess number of people or inefficiency, but the underpricing, and that is where the huge losses are being generated. Then you have the problem that we are trying to artificially, through moral suasion, try to sustain a totally unsustainable exchange rate. Because what you're doing is that by trying to artificially keep an exchange rate, even look what's happening with the remittances, that they're dropping because it's all probably coming through the informal system because nobody wants to send it through the formal channel and get artificially low interest rate. The next challenge that we are going to have, Riaz, is that we need to heal this economy, quite literally. It's not only healing from COVID, but COVID has done a lot of damage to the economy. And in any kind of capitalist system, failure is an integral part of the functioning of the economy. Now, my sense is that we don't have a very efficient way to heal, which means we don't have a law or system to allow bankruptcies. Bankruptcy is a very complicated process in Sri Lanka. It's covered under, the Companies Act, and then there is no consolidated bankruptcy law. To me, that is a great need that needs to be immediately done because even the bankers will agree that, many of these companies under moratorium, and even Sanat alluded to the fact that in the tourism industry, maybe they are looking for some kind of a bailout. But in the absence of a bailout, a lot of these firms are going to fail, right? And we do not have a mechanism to resolve. We may know how to liquidate, but the damage, the loss in liquidation is much greater than resolution. And finally, we need to get the growth engine going, right? So even a debt sustainability, if we are going to default on our debt, and which I feel that it's going to be maybe another 5 to 6 months because our reserves are going down. We're already at 2.27 billion. You probably, at the end of the year, will probably come down to about 1.8 billion unless some large inflow comes that I'm not aware of. And the things are only going to get worse. So in order for us to grow, basically, we have to improve productivity. The other one is, like Sanjay was trying to speak about, all the initiatives to get investment. I must give full credit to the government with regard to these industrial zones that they are trying to set up. Because when the Center for International Development from the Kennedy School came and did their growth diagnostic framework, problems with land was one of the main binding constraints because 82% of the land is owned by the state. So trying to set up these industrial parks is a really great idea because even the current BOI industrial zones, they're running at like 90-95% occupancy. So it works because it's a simple plug and play that either overseas investor, local investor, the interstate, interagency coordination problem is taken care of because there are a lot of pre-approvals. The problem with productivity improvement is the key thing is competition. And I didn't hear anything in this budget that talked about increasing competition, because it may be an ideological problem that the government is trying to increase production, or I would call economic output, but the key driver of that is competition. So we are putting barriers against imports and saying let's make stuff in Sri Lanka. It's counterintuitive. Now there was a mention about removing some cessors. Now the biggest protectionism is coming through the cessors. So they didn't give, Mr. Article didn't give any details of what these cess removals are. They said that agriculture and a few other things, alcohol and tobacco and a few things, they're going to keep the cess. That in other things they're going to remove it. Now, if they remove those protectionist cess, that's a game changer, because a lot of prices will come down and the competition will improve.
Okay. I'm going to ask this question next, actually picking a cue from what Murtaza said, and this might be relevant to both Suresh and Sanat. You know, both your industries, both your sectors, whether it's export or even the tourism, have an important import component. I mean, we do, except for a very few, we don't have huge value addition. We do have to import a significant portion. How do you see the current issues that we have on import restrictions affecting your particular sectors? Suresh for the export and Sanat for the leisure sector, because even the hotels import, I think, a lot of, at least 30-40% of their or even more of their inputs into the industry. So maybe I'll ask Sanat to go first and then ask Suresh to come next. Sanat?
Yes, sir. Actually, we don't import so much of goods, so import restrictions don't have a major impact on our industry, as long as the basic necessities like oil, sugar, flour, gas, and other basic food stuff are freely available. Also, the government has assured us that as we are generating foreign exchange, we can import any item that's needed to maintain our operations and service our guests without any hindrance. So the beauty about our tourism industry is that we source 60 to 90% of our ingredients and raw materials locally.
Okay.
So we have no major issue, and we are allowed to import whatever the little items like foreign liquor, some food products, and maybe spare parts for our plant and machinery. These are the things that we import, and that's amounting to negligible comparison to $4.5 billion that we generate at the best of times.
Okay. And Suresh, from your sector, I think our exporters do have a fair amount of import component. What is your thoughts on that?
Yeah, on that, we can import. It's just that some of these items were banned, and it's the banned items that people are struggling with. And sometimes now, like agrochemicals that were being used for industrial purposes, now we've been facilitating licenses for some of that banned stuff. For instance, the rubber industry uses urea, and we have to give import urea with licensing. So these things are happening, and unless the raw material input is banned, there is not a major issue with the import restriction. There is a bigger issue with the inability to open LCs with the foreign exchange crunch, and that's a banking issue. So other than that, we at the Export Development Board have been helping any exporter who has an issue with raw material imports we've been able to pretty much sort it out. It's it's taking time, but a lot of the imports are sorted out now.
Okay, thanks for that. Actually, I'm going to go back to the banking because even Suresh did talk about the banking, and I'm going to bring Lakshman back online. Lakshman, you know, the issue of opening LCs is a matter that I think has concerned both the exporters and others. How are the banks dealing with that issue? How do you think that this is a problem that is temporary and will go away, or is there something that you should address? You're on mute, Lakshman.
First thing, I should correct one position with Suresh mentioned about exporters having to import material. I think banking sector does not have a problem of opening LCs with regard to the export clients who has to bring in their import content to Sri Lanka, provided they channel all the export proceeds through the banking channel. So I think as a priority sector, bankers have been taking a lot more positive approach towards the exporters to bring in export proceeds to Sri Lanka, and also to assist them in opening of LCs to get their material down or anything of that sort. So I think exporters should not have a problem at this moment, because liquidity does not a major concern in that regard, because what the bankers are mainly facing is because with regard to the direct importers to Sri Lanka, who are actually LKR people who are dealing in LKR. So most of the banks are having a problem of managing their net open positions when it comes to LC opening. So having said that, I think we have passed the, I would say, the worst situation what we faced about few months ago. We are optimistic that situation should get normalized, because for two reasons. One is, why this happened is because some of the exports didn't come, proceeds didn't come, exports didn't happen as expected due to delays in shipments, various other outside Sri Lanka, the restrictions that were there. So the people could not do the exports properly. That is one reason. Second reason is that with the pandemic, I believe large number of foreign employers who were desperate to come to Sri Lanka for vaccination and other reasons were in Sri Lanka for a long period of time. And now only that we see that all foreign employers are now moving out of the country to their various employment opportunities. So I believe within the next 2-3 months, once they establish themselves again, the remittances flow should come into Sri Lanka. And in addition to that, there are a few other challenges that the banks are facing, as Murtaza mentioned, whether the exchange rate is a realistic rate, whether the off-bank channels are being used by people. So I think that is where the central bank had come in, and the governor mentioned several times that the rate stabilization has happened in the country. We expect the rates to remain as it is, so then the confidence level be built up. And also there are certain monitoring mechanisms that have been imposed by the central bank to make sure not only the banking sector, non-banking sector, other sectors, how would they manage the foreign exchange, and all that are also expected. So I believe, to answer your question, this is an issue that we are facing, but I'm hopeful with the initiatives that have been taken, and of course with the foreign flows that are expected, we should see a better position in the near future.
Thank you, Lakshman. I think on that positive note, it's always nice to end on a positive note. I think it leaves for me to thank the panelists particularly. I know we had, if we had time, we could have gone on and on with such an eminent panel, but I'm sure our listeners would have enjoyed listening to the diverse views that we heard. And thank you again for being with us this evening. And giving off your valuable time. And I'll pass it back to Nipuni.
Thank you. A very big thank you once again to our panelists, our eminent panelists who had many views. Ladies and gentlemen, I'm sure all of you will agree that the views presented today were not just single-minded and they were not focused all in the same direction. In fact, we had quite a lot of discussion and several different opinions and views. So this is apparent that we are going towards a resurgence, and this is what the budget proposals and the discussions related to them should really stimulate: discussion, understanding and analysis from the technocracy really about what we should expect and how the economy should be driven. Ladies and gentlemen, we hope that 2022 budget proposals will in fact bring about a resurgence in a COVID-19 hit economy. Many of the problems were highlighted tonight. There were difficult decisions that were brought to the fore both by the policymakers and those members of industry, and also the need for new thinking and the need for open-mindedness was also highlighted here. Perhaps one of the more important points, I think Mr. Mueller will agree, was focus on collaboration and a focus on this stimulating FDI, because we have so far to go and we need a resurgence in the coming few months. So, ladies and gentlemen, on that note, these were the highlights that KPMG brought to you. I'm sure you will agree that with the clear choice that KPMG brings to the market and our depth of knowledge, you have had analysis and insight into the budget proposals 2022. So once again, whilst thanking all our panelists for joining us tonight, soon after the budget presentation on a Friday night, and while thanking all of you for joining in to listen to how we think the budget proposals will play out over the next year. It's time for us to wind up. Thank you very much again. Don't forget to tune in at 10 p.m. on TV1 for the full program. Ladies and gentlemen, until then, it's a very good night. We'll see you again next year with our analysis. And here's hoping that Sri Lanka will indeed see a resurgence in 2022. Thank you and good night.